Hi everyone, my name is Gray Pendleton. So nice to have you here today for our 2025 Mid-Year Economic Summit and Tax Law Update. So before we get started, we just like to announce, an educated client is our best client. And at our firm, we have a core values belief system that we have. We do have an asset minimum. We're an investment management firm, but we are open and accepting of all people. The main qualification is that you're a kind person. And so really encourage you to take a look at our value statement, see if we may be a good fit. Not a great fit for everyone, but really trying to attract everyone here and really looking forward to work with you. We are based in North Carolina, but we do serve clients throughout the world. So thank you for coming today. We partner with clients. Again, we always try our best to help you when it comes to your finances, but we believe that knowledge is power. So one of our missions is to share with clients any knowledge that can better help them make an informed decision. So today's agenda is straightforward. First, we're going to provide a review of equity market performance in the first half of the year. Then we're going to discuss some strategies and ideas that you can consider for the rest of the year and beyond. And finally, we're going to share a brief tax law update. So a lot of updates coming, more on that, but stay tuned and hope you enjoy today's little program here. If you have any questions, there's a link below. You can reach out to us with questions. We are scheduling a lot of our meetings now with existing clients and prospect clients kind of starting in September, so kind of like at the end of the summer. So if there's an emergency or something, we're always here for you. And feel free to reach out because we can do an intro call if you're interested in learning more at any time. Or if you have any questions in your current client, please don't hesitate to reach out and let us know. We're always here for you because you know what, life happens and doesn't always happen according to plan. So, all right, so let's get started. It's always very important to review that there are 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. And even though today's presentation is primarily going to be about equity markets, as a comprehensive wealth management firm, we try to consider the impact of any recommendation we make on not just one, but all of these areas for our clients. Wow, what a year it's been. Let's quickly recap. Okay, 2024 was a year that rewarded patient and long-term investors with healthy equity returns. 2025 started off on a strong note. In fact, in February, we saw an all-time high, but that was short-lived. Volatility really emerged quickly. It's not unusual for equity markets to pull back after 2 great years. But what was uncomfortable was the high level of volatility we experienced since February, really bottoming in April. So what happened was basically, it seems wild. If you look at the news, things are not stable, but the markets have stabilized, right? So basically what happened was the tariff policy that went into place really kind of freaked out the markets. And then when those tariff policies were given a 90-day reprieve, the market surged significantly from that bottom period. So we were fortunate. For some folks that had some cash on the sidelines kind of waiting, we were able to pump a bunch of money in the market during that really close to the bottom. Now, if you had a full equity position, you're a young investor, maybe you just kind of stuck through it, but really nice when we're able to take advantage of those opportunities, although we're not a market timing firm. But sometimes we need to take advantage of situations that present themselves. So we're happy to do that for our clients. That makes us feel good when we can help you all. So, all right. Wow. If you look just year to date, now this is, it is currently June 2025, but here's kind of year to the end of May. If you looked at the S&P 500 January 1st, you pull out the Wall Street Journal, you go to CNBC.com, or whatever the case may be, you see that the equity market has risen slightly, a little bit less than 1%, right? No big deal. But look at this chart, right? You can see the bottom there, and you may remember the little bit of panic there was there. So we did preserve like a healthy amount of cash for those people that did have some cash in their portfolio, because we never know, right? The market could have dropped another 20%. The market may drop 40% in 3 months. It may go up 20% again, right? We don't know. The key thing is making sure that you have a well-diversified portfolio and enough cash to maintain your lifestyle and expenses for the foreseeable future, which anywhere from 2 to 5 years is kind of the way we look at it, depending on your situation. So, the monthly returns kind of show you some of what was going on, but really the big bottom was in April, and it's wild. If you had left the equity market in March, you would have missed May, which was one of the best May equity market returns since 1990, and the best monthly returns since November 1993. This is why market timing is dangerous, right? Because specifically, April 4th, the market dropped 6%. Its worst loss of 2025, one of the worst days in over 40 years. And if you looked at the market, if you looked at the news, a lot of the folks were saying, get out now, right? Now's the time to get out. Well, then on April 9th, the market dropped 12% in one day. So it just shows you how tough that is, right? Now there were some folks that had, that we were trying to get into the market that had a heavy amount of cash. A few folks we did, a couple situations where, hey, wait, let me get back to you, and now the situation has passed. So just know that trust us with our recommendations, and that we're there for you. We have your back. But yeah, market timing can be dangerous for this reason. So timing is perspective. Equities are long-term investments, and as this chart illustrates, even with downturns, long-term investors have stayed in the market. That have stayed in the market have seen considerable returns. Now you may say, hey, Gray, that's great. I'm a retiree. By the way, we work with a lot of retirees and pre-retirees, as well as retirement plans. But we do work with all kinds of people. I don't have 40 years. I have 15. Well, great. We look at long term as anything 5 years or more. So just keep that as a frame of mind, because you want to make sure with the rising cost of inflation, even we'll get to that in a second, but even at a lower inflation rate, your money's going to be eaten up over time, right? The value of a dollar tomorrow is less than it is today. So we need to factor that in. We need to have a portion of your investments to grow over time to keep up with that demand. So to keep up with that, the inflation there. And just note that we like to say once every 5 years, the market's going to drop, 30 to 50%. Now that's not going to happen with consistency. We can't time that. Really, once every year, the market's going to drop 10 to 20%. Once every 5 years, it's going to be roughly double that. So just bear that in mind, that the seas sometimes get stormy, but our clients they have a good captain here, right? So and it's a well-built ship. So looking forward to continuing the conversation. Let's go into interest rates. Interest rates, as you can see in this chart, right? No changes for January, March, and May. So we had kind of a flatlining there. And, we don't know what the future holds, right? Inflation is significant. The Fed has printed money, and that started in the Trump administration. The Biden administration continued it. It looks like the current Trump administration is going to continue the trend of profligate spending. So it's a concern that we have, and, one of the Fed's main goals is fighting inflation, right? It's full employment and fighting inflation. And, if they are concerned about inflation, like from tariffs or something else, then, they're going to be reluctant to lower the rate anymore. So that's just something to consider. We don't know what the future holds there, obviously, right? No one does specifically, but this is, the Fed is currently forecasting it will start easing only in December, with other possible rate cuts coming in 2026. So, all right. The Consumer Price Index. Let's go into the CPI. This is basically inflation. Okay, so we're at 2.4%. If you take out food and energy, we're up at 2.8%, right? So some of the concern is that the tariffs that are being levied and have been talked about are going to cause inflation to come back. So, we're just going to continue to watch this, monitor the situation, see how things go. As I mentioned, when the tariff was given those 90-day reprieves back in early April, the market surged higher. So, the market can be disrupted by anything, and there's lots of things that may happen that we don't know, right? Any number of variables can occur. So we have to be ready for any eventuality. And that's like a so-called black swan or something like that. So, I started my career on one of the largest trading floors in the world, and, 07 to 09, and was working on a credit derivatives desk. And so, the things happen, right? The subprime mortgage crisis. Now, looking back, everyone said, well, I know exactly what it was. And sure, yes, there were a few people that did call it, but it was very few and far between. And so these things pop up that are just unforeseeable, right? We've had, Kennedy was assassinated, and the Cuban Missile Crisis, and all of the collapse of the Soviet Union. all sorts of large events that have happened during our lifetimes that, shock the market. So just things to think about, and they can shocks can go both ways, right? Tariffs. Now, at the time we prepared this workshop, U.S. and China had agreed to reduce tariff for 90 days, and they're meeting and trying to work out how this is going to work out. But, they're our largest trading partner. China is our largest trading partner in the United States, right? We're a U.S.-based firm, and it's something to be mindful of. So one concern about that we have with the tariffs was that there was a lot of demand trying to get ahead of the tariffs, and there does look like some slowdowns going on. But again, this is all just economic commentary. It doesn't mean you should adjust your portfolio based on this. You need to have a long-term plan, again, because it's very impossible to accurately time time the markets, right? So we got to be careful with that moving forward. But you want to make sure you have enough cash available. You want to make sure that you have the right amount of risk for you. And there's a lot of variables involved there. So if you want to talk about that, just let us know. We'll walk you through the whole situation and what that means for you. Cost of borrowing is up. Average credit card interest rate is 22% right now. And so, that is pretty significant. Rent and home prices rose an average of 4% versus 3.3% a year before the pandemic. So you're still seeing the cost of shelter rising. Now we are seeing some slowdowns in some housing markets. In Raleigh, for instance, there's a lot of homes sitting in the market. That's been something new that hadn't happened in a while. Now that could just be a momentary blip. It could be a sign of something worse. We see secondary home markets, a lot of inventory sitting out there, some price reductions, and it's been a long time since we've seen that. So just things to note. Again, at the end of the day, we're investing in the great companies of America and throughout the world, right? That's what we're doing. That's what we're doing for our clients. We want to make sure that they have enough income to sustain themselves for the short term, and that the rest of their money is growing for that long term, right? Whether that's your retirement, your late retirement years, your children, the legacy, whatever the case may be. So, we just need to be mindful of that long-term plan, which we're still, confident in. Now, bonds are kind of like medicine, right? Yeah, we take medicine, it helps us feel better, doesn't always taste great, and that's the case here, right? So, bonds typically try to stabilize a portfolio from a drop. And by, basically the 10-year yield curve fell to 4% 2 days after this, the tariffs were announced. So we did see rates come down a little bit. Now, if you look at this chart here, rates are up significantly from where they were back, in 2020. So rates have come up significantly, as you've seen. Like mortgage rates have come up significantly, and that's part of the reason why housing is having an issue, because rates are just staying stubbornly high. The good news is that if you have cash sitting on the sidelines, you can earn some interest on there, which we still see a lot of banks paying 1% or none percent. So if you have cash on the sidelines, there's other options for you there. We have lots of vehicles that we'll have our clients in that have helped out. With bonds, we do like shorter term bonds, but the future is uncertain. So we moved to shorter term bonds for most of our clients, back before the big price surge. We did see, if you note this chart, 2022. Although bonds typically will provide stability for a portfolio, in 2022, they went down when the price of stocks went down. So it doesn't always work out perfectly, but where do we go for here, right? Most economists predicted a market correction, from here. So we'll see. We already had one back in April. So now that the tariffs have been taken off the table, there's some hope that this recession will not happen. I'm sorry, we did have a correction, but this recession that did not happen. So opportunities during market downturns: add new money to your retirement or brokerage account, rebalance the portfolio. Now, for our clients, we were able to put more money if it was appropriate. We were able to put more money into the market or rebalance portfolios into the drop. Now, it wasn't appropriate for everyone, so we didn't do it for everyone. But we were able to put a significant amount of money into the market there. Again, we don't always get the bottom. That's not our main mission. Our job is to make sure you do not outlive your money. But we've discussed Roth conversions for folks, strategic tax planning opportunities. So, it's something to be mindful of for the future. We did experience it in the past. We will experience it again. So, just when opportunities present themselves, sometimes we need to move quickly And there are a few clients that said, hey, don't move without my permission. And then, they kind of missed that opportunity. So just be mindful of that. Volatility is part of the experience. Long-term diversified investment strategy. You are investing in corporations that make things, that produce things, that provide value, right? You're receiving potentially dividends for owning those shares, and you're also able to see the value appreciation over time, right? That's going to be that inflation fighter. So focus on time in the market, not market timing. Take advantage of opportunities during market downturns. Again, it's very hard. We had lots of conversations with people, and it's always like, oh yeah, let me get back to you. And it's hard. If we don't manage the money, it's hard to do. Like in your it's hard to take the actions for some people. So just know where you stand on that. Certainly, there's all different kinds of people out there, but our job is to help you, make more money, save on taxes, and live a better life. So, do you have financial liquidity? This is the key thing. What we do not want to have happen for you, kind listener, or for any of our clients, or both, is to be in a situation where we're having to sell things at a loss to generate income. So we always want to make sure we have a good cushion there. And let us know, hey, I want to buy a beach house, or whatever. I got to send the kids to college. Now we've planned all that stuff, but sometimes things come up out of nowhere. Of hey, I need $100,000 for this, that, and the other, and it's like, well, okay. Good thing the market's near an all-time high, because that's fine. Just let us know in the future. So we do have these conversations consistently with our clients, but just be mindful of that. You need to have money set aside. So key takeaways: interest rates are currently steady. Market correction was short-lived. Volatility remains with trade tensions, proposed tax law changes. There's currently a situation going on between Iran and Israel right now. Of course, we have the Israeli conflict with Gaza. And we also have the Russian-Ukrainian war going on with that. So just stay the course, focus on the long term, and we're here to discuss anything you have. Now, again, focus on the long term. The first half of the year has shown you why it's a good idea to stay the course. I did talk to some people that were like, oh, I pulled all my money out. So, okay, not our clients, but folks we're speaking with. Okay, all right, well, good luck with that. So you just never know what's going to happen, right? So focus on the long term and, have a good plan. And we always say don't keep all your eggs in one basket, but it's okay to keep all your chickens on the same farm. And so just, be mindful of just making sure you have a diversified portfolio. And let us know. We're happy to kind of talk through things with you. Our mantra for a while has been proceed with caution, and that's helped us out. But we can't control financial markets, inflation, interest rates, but we can keep a watchful eye on them. So we want you to be comfortable knowing that we are staying apprised of the situations that may affect you. Our goal as the stewards of your wealth is to help you through uncertain times like these. We always attempt to help you create a well-crafted plan customized to your unique situation. So if you have any questions about your personal situation, let us know. And again, if you'd like an introductory call, one of my staff can be of assistance with that as well. And we're taking those at any time. So there's a calendar link on our account on our website. If for some reason that doesn't work, just reach out via the contact us link or form. Tax law changes coming. Okay, we are operating under the 2017 Tax Cuts and Jobs Act, right? President Trump was in office back then. He and the Congress put this law into place. It has helped out a lot of our clients, right? But I am concerned about the long-term debt situation. We'll see what happens. This law is going to expire at the end of this year. The big beautiful bill that was proposed, I'm very concerned about the fiscal situation in the United States personally. I am concerned about extra spending. They save 3 cents over here with Doge, and they go around and spend dollars over there. So we got to be mindful of that we can't just spend and not have the revenue, right? Just like we do in our own personal budgets. So I say that because this new tax proposal, if rates go back to the way they were, most of our clients will see an increase, right? This bracket 2 to 5 and 7, right? This is the bulk of our clients. And a lot of folks, when you're retired, you may have assets, you may have earned a lot of income, but you then pop into one of these lower brackets. So that's also a time to take advantage of being in a low bracket because tax rates may go up in the future, right? I think they will. I think we're in a good tax regime now, so take advantage of these low tax bracket years because they may not last. We'll let you know towards the end of the year. You typically have time to plan. So we will keep you abreast of more information as it comes, because this is going to be a big year. We have a lot of conferences this year on tax, so we will keep you up to date on those. The proposed tax plan, it's looking like the estate tax exemption is going to stay and increase. Currently almost $14 million per person, so that's pretty high, right? And there is a new deduction for individuals over 65. So again, we'll let you know. There's going to be changes. It's probably not going to be what you just saw, but we're tracking it, and we do have time, from September till the end of the year. It's just who knows when that tax law is going to go into place. What we do know is that if nothing changes, January 1st, 2026, tax rates will go up if nothing else changes, if no bill passes. So something to be mindful of. All right. We appreciate you. We're very grateful for our clients. We're a grateful and kind place. We love working with our people. And again, if you know anyone, we do have an asset minimum. We're an investment management firm that offers full service financial planning, wealth management, investment management, tax planning. But our doors are open to all people. And we want to be very clear about that, as long as you're a kind and nice person, right? So if you know anyone that may benefit from us, feel free to add them to our list. Like this content, share it. We'd love that. Thank you for everything. We appreciate you. Consider leaving us a Google review. We always appreciate that as well. So you can scan this code right here for that. And thank you. And then also, focus on your health, because money's great, but if your health isn't there, what's it all for, right? So just be thinking about that. I had a conversation earlier today with someone who, things changed on her job situation, and the picture was not as rosy as it was in the workplace. And we went through all the numbers, and we said, hey, you could retire today if you wanted to. And that was very relieving for her. And certainly the longer you wait, the more money you'll have, but at what cost, right? And I think it's good to do something, right? She won't just stop working. It's just be kind of a shift, but it's nice to know that she can, right? And a lot of people are in that situation. I think it's good for us to do something as humans. It's good to have some sort of work and purpose in life to do something. So anyway, with that, just want to thank you again. And if you have any questions, please reach out, and I hope you have a wonderful day. Thanks so much. Bye.